Here we are in the S&P 500. This is a daily chart over here, and I will show the daily chart. When I said that S&P 500 had to come down, it came up, and it darn sure hit our prices up here at that 1370 level. Go to stockmarketfunny.com. Look at all the S&P analysis. Look at, we had that correction here. Then the correction was over in February. We rallied up to a reversal. We've got huge distribution today. The little Memorial Day rally with people pumping, dumping their little portfolio dressing at the last week of that Memorial holiday. You are taking it out 2 times greater on the sell side versus the little gap up where that was called portfolio dressing. It bounced off of the 100-day moving average, but it doesn't matter. What matters is that we called the top right there at 1370. That trends themselves have counter trend volatility, then big sells, because the original reversal from the overbought level has not gone low enough. When we were shorting it early in the year to here, we hit a bottom, we came out, we didn't look back until we got to that high, and we got more overbought. We were overbought there, we got more overbought here, and we are coming down. That is a daily. You got a daily sell signal on the S&P. Your counter rally has failed. There it is right there. Go to the stockmarketfunny.com homepage. Look at all of the analysis before the fact. If you don't know it before the fact, what good's it going to do you when it gets down here? You want to listen to them people on TV saying, oh, gee, it looks like the market's selling off. Why couldn't they tell you over here? Answer me that. Why? Because they are irrational, exuberant at tops. They're called bull top exuberant tops. Now, bull rallies have good pullbacks and create certain buying opportunities. However, what we're looking at on the daily levels, you're coming right back down through all those simple moving averages. When we first bounced off that 50-day, that white line, then we got below it and they came back up. But they used this little days at the end of the month to buy the beaten down commodities, and I'll be going over that on a market recap. This is midday update. Big selling on the S&P 500. S&P is down 21.6 handles. We already did the Dow. That's the daily. Let's go to the weekly one. The weekly one, as we have clearly said about this top up here on the S&P, is that these were narrow range pullbacks from an overbought level. And what used to be support at the 10-week moving average is no longer. Where does the selling increase on this weekly? And the week is not over. It's when you break below the red line, called a 20-week simple moving average. And what we look for is, like over here, is how this is part of this 5-day, and it's June 1. When we go below it, if we don't bounce and consolidate, but how does it go lower? It sells through it, and if it breaks through it, and you can see the pullback from the overbought levels. You got all of the analysis. I'm not going over it in this video. You go do the work. You go look at our videos. They're all live. Our analysis before the fact. We call tops. We call bottoms. We call reversals. Bull rally, bear rally, bull rally, pullbacks. You name it. It doesn't matter. It's all before the fact, not after the fact. And I can tell you, if the innocent public is looking at this video, you might want to get out of that camp. Because by the time it corrects and gets down and everyone's talking about it, that's about the time I'm getting net long. Off the bottoms, naturally. As people throw in the towel and get washed out from the overbought process, that gives the SMF MMTs, their international trader network that we have and everyone alike, is able to make the right kind of decisions, knowing when the short side is printing, knowing when the overbought cycles are there, knowing where the bull rally pullbacks have to be, knowing how people get washed out, sold out. That's what it's about. Volatility will be here for the remainder of the calendar year. It was a month and a half, a couple of months ago. I said that price action volatility from this reversal right here, from that top, that we would increase in volatility. And price action volatility will continue to increase throughout June, July, and August. Volatility makes you money. knowing when to be short, knowing when to be long, knowing when you're taking out this, knowing how the public model works. And remember, folks, listen, nothing goes straight down, but the longer term trend structure is when we come down to this 100-day moving average right here tomorrow and we sell through it, we got a lot lower to go. And the last lows that we called on the S&P from the original February reversal was down to 1251, because we have yearly formulas on the S&P indexes and sector indices. We got them all. And it was all about selling short overbought equities that have ran too far too fast, and how that irrational exuberance turns you profits with overnight trade management, intraday trade management, and trade management all the way around. When you break the red line, you sell harder. When you come down and you start to sell through a 100-day moving average, not to mention that you've got a 1, 2, 3, 4, 5, 6-day sell signal on the MACD. It's all public standard technical analysis. However, these are how these things work. Between bear and bull runs, irrational exuberance. You also can get irrational pessimisticness too. And when they get irrational pessimistic part of it, then that means people are clearing out. And the higher that count will get at a bottom, the bigger net long we will get. Understanding indexes and indices, earnings, not to mention, you're in the summer trade. And if we can sell everybody out in the next month, this calendar month, we get into the earnings seasons in July, then we may have a great bull rally set up again. We're not there yet. Not until I say we're there.